Manishi Raychaudhuri is our market master today. He's the Asian Equity Strategist-Equity Cash for Asia Pacific at BNP Paribas. He's joining us to take some questions. Manishi, great to have you with us here. Thank you very much. So the question is about this outperformance. You know, I put out a piece on Friday, and we played this up yesterday as well, about how maybe there is increasing clamor to unbundle India from the emerging market pack. Emerging market funds is the route through which foreign funds come to India. And with bulk of the emerging market constituents facing pain of one sort or the other, big and small, flows get impacted. Prospects here are looking better than most other emerging markets, so that case of unbundling is being made. I don't know if that is already playing out. What do you make of this very stark outperformance that we have on our hands now?
If I look at Asian emerging markets, it's really India and ASEAN which have outperformed significantly this year. In fact, on a dollar-adjusted basis, India is just about negative. It's kind of almost teetering on the edge, one could say. And there are some other, ASEAN markets like Indonesia or Singapore, which have actually given positive returns this year. There's a reason behind this. Number one, if I look at the large North Asian markets and China, they've been affected negatively. The sentiments and earnings estimates have been affected by various different reasons. So first of all, there's a concern about sharp economic slowdown and a recession in the developed markets. Therefore, Korea and Taiwan, which cater to those markets, the large exporters are geared to those markets. They have not only faced significant earnings estimate decline, but also significant underperformance as far as stock prices are concerned. In case of China, even though it has a large domestic market presence, the zero COVID policy has actually dented economic growth and consumer demand growth very strongly. And we have also had some of the exporters, particularly the tech exporters, not doing so well because of the same reasons for Korea and Taiwan. So the kind of fund exodus that we have seen from these North Asian markets, part of that has flown into the South Asian and India, and the Indian market. On top of that, some of these markets have also fundamentally done better. I mean, we have seen India move back very strongly as far as economic growth is concerned post-COVID. We have seen earnings estimates of some of the core sectors like financials, some of the private sector banks, they have moved up of late. Some of the core economic variables that we talk about, like the loan growth in the banking sector, they have revived quite strongly. So, I think it's a combination of many things. I mean, there are quite a few of the large North Asian markets which have become relatively unattractive over the past 6 to 9 months. Some of the ASEAN and the Indian market, they have become relatively attractive, partly because of their commodity exporting nature and partly because of the domestic upturn in the macroeconomic variables that we have seen in these markets.
Okay. Manishi, hi. Good morning. So, from the point of view of earnings and from the point of view of valuations, the Indian market is now trading at almost record premium to emerging market peers, right? Do you think
Yes.
will that make you a bit nervous, or do you think it's a market where momentum can do crazy things?
Right. It's a difficult question to answer, but honestly, the kind of premium that we're seeing right now, as far as Indian valuations compared to emerging market or the Asian peers are concerned, that is a bit concerning over the short term. So it may happen that the Indian market could take a breather. We could see some kind of a time correction in the near term where the market stays flat and therefore the valuations decline, not because the market declines, but purely because the earnings estimate progressively increases. So, I think in the short term, the valuations are looking a bit stretched, especially when compared to the rest of Asia. But as I said, I mean, market loves growth. equities are geared, equity investors, they love growth, and wherever they can see earnings growth, wherever they can see earnings estimates being revised upwards, those are the markets that they will flock to. So, over the longer term, we are still not budging from our, overweight stance on India.
Okay, by the way, there are plenty of stocks that are hitting fresh 52-week highs, and we should point them out. BEL, this whole defense theme has played out beautifully. So BEL is up at a fresh high. Ashok Leyland is sitting at a fresh 52-week high. M&M Financial, you have something like a TVS Motor. ITD Cementation, Oberoi Realty is at a fresh 52-week high as well this morning. That stock is now up about 22% for the year. Manishi, hi, good morning. I wanted your thoughts on this entire consumption space, whether it's autos, real estate, consumer durables, FMCG. Right. Domestic consumption has picked up in a big way. What stands out for you, where there is growth potential and also valuation comfort?
I think growth potential is clear, because it's kind of bouncing back from the kind of COVID lows that that we've seen over the past 2 years or so. So over the next couple of years, at least, for both staples and discretionaries, and particularly for the discretionaries, we're likely to see the kind of growth recovery that we're seeing now. And I would also point out that late last year, second half of last year, and the first quarter of this year, there was severe concern on the margins of these companies, consumer staples and discretionaries, because of the commodity spike. But now we're seeing industrial metal prices, soft commodity prices, they have declined quite a bit. So I think that margin concern that we had seen earlier over the past 9 months, that is kind of being turned on it.
Oops, there's some issue with your video, Manishi, so we'll come back to you in a bit. For now, just want to point out that the market is doing quite well, actually, about 0.5% higher on the Sensex and the Nifty. The Bank Nifty is not outperforming today, but it's still up about 130 odd points. These NBFCs are doing quite well. M&M Financial has been at the top of the pile, for a while now. So that one is at a fresh 52-week high. Manishi, sorry, we lost you there for a second. You were telling us about the outperformance that India has seen?
Yes, I mean, I was specifically focusing on the consumer stocks, both staples and discretionaries, and I was talking about their margin estimates. Because earlier, I mean, till, let's say, the first quarter of this year, there was a huge concern of margin estimates because of the commodity spike. But now those commodity prices, industrial metals and soft commodities, they have declined quite a bit. So margin estimates are being revised upwards, and that's leading to earnings estimates for these sectors being revised up as well.
Okay. Manishi, we've seen quite a bit of run in some of these tier 2 banks. Any thoughts here? What could be leading to this move?
Well, I mean, obviously, it's the more optimistic outlook on loan growth. Loan growth, which was just about 6 to 7% last year, has now moved up to about 14%. And, therefore, there is clear sort of consensus emerging that both consumption loans and corporate loans, both these engines are beginning to work together simultaneously. So I think that's sort of driving this outperformance on the part of financials. That said, we are not really kind of venturing into those tier 2 or tier 3 banks. Our focus is still on the large frontline private sector banks, which we think would be the gainers, not just from loan growth environment improving, but also which obviously would lead to higher net interest margin expansion for them.
Okay. I wanted to talk a little bit about some of the other emerging sectors, right? There is the defense space, which has been rising quite a bit. There is this new energy space, which is picking up. I mean, Reliance just made another small acquisition of a solar energy technology company. So there's lots happening here as well. How are these spaces for you as an investor in the long term?
See, obviously, there are certain sectors. You mentioned defense. I would possibly add new energy. including the entire electric vehicle supply chain, both the OEMs and the battery and the materials sectors below them. Also, solar and wind power. These are the sectors of the future. So, over the longer term, we will obviously find more investment opportunities in these sectors. As of now in India, much of this is sort of in the private equity space. They're not listed. In a sense, India is possibly 10 to 15 years behind China, but in the Chinese onshore market, you can find a whole host of listed stocks in these areas. So yes, I mean, these are no doubt attractive spaces. There would be more interest and more investments from secondary market as well at some point of time. But at the same time, one has to be, sort of vigilant about the valuations that, one pays about in these sectors. And at the same time, there has to be a careful identification of the winners, because like we have seen in many sectors, there's a deluge of entrants at the beginning. Not too many of them survive at the end. So it's a difficult selection process that the investors would have to go through.
Okay, Manishi, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always.